Ladies and gentlemen of the crypto space, we're live on a Friday, February 18th at 11:31 a.m. Bullishly bearish. How do you navigate this insanity? If you think you know where the market is heading, you think you see an asset, a meme coin that's just going to do extremely well. What does extremely well mean? What does a meme coin? What is the psychology at play? Folks are totally misreading the markets. There's so much pain is going to occur. It's like 2018 all over again. There's going to be a reckoning. Garbage will be expelled. Coins will just be absolutely worthless. Now, these are just extremely bearish statements, but all the macro conditions point to this. It's exactly what happened in 18. What happened in 18 in the crypto space? The extreme bearishness was quantitative tightening, was the entire macroeconomic system crushing markets, whether it's the crypto space or the equities markets. It's what happened. And that's everything the macroeconomic landscape is painting a picture of right now. Now, bear in mind, I also say bullish because I'm a perma bull and a perma bear simultaneously. So, how do I manifest that in reality with a carefully constructed, well thought out, rational portfolio? I have a capacity to adjust that portfolio. I have no inhibition to taking losses. I have no inhibition to restructuring a portfolio, to go increasingly risk off or adjust the position size to respect my risk tolerance for the exposure I want to a particular asset. The vast majority of my positions are 1% plays, 1, 2% maybe. We've talked about this all the time. 1% to 10% changes everything. Folks take too large of a position. Now, folks that see in Discord my portfolio structure and balance will see a large position or two large positions. I have at times had 3 and 4 very large positions. But that's not a 1% to 10% changes everything. That's a hang your hat on a narrative that something is different this time. Um, Something is certainly different this time. I'm not really fond of the prevailing talking points of traditional finance, macro folks. I mean, a lot of them have a high opinion of what's being built here, but there's a lot of skeptics and permacritics, and that's understandable in many regards. But I'm an engineer. I know the software, and I understand the macro. I understand things conceptually, metaphorically, and I put things into practical application and how these things that are being built in the crypto space compare to structures and technology in traditional finance. And that's the primary methodology I use to identify things that I want to allocate value to, that I want to align my portfolio with in the crypto space. Structures that have been historically significant, fundamental to the function of the traditional financial systems, is why we talk about debt markets, money markets, collateralized debt positions, stable coins that are technologically the same thing as a euro dollar, so on and so forth. And disintermediated forex markets. And this is everything. That is unquestionably why it's different this time. What do I know? I know that when macro conditions are right, it's gonna be crushing. And it's gonna crush stuff. Certain things first. What will get completely annihilated are assets that have no function, something you can't do anything with. If the only purpose of an asset is to be sold, if macro conditions are right, it will be completely sold, just as it was in 2018 and earlier cycles, 2014, so on and so forth. When the bearishness hits, if there's no reason to hold an asset other than its dollar denominated value, it's going to be unloaded. Maybe even worse is a creation of the last 2 years are pool 2 assets. Any asset that pays you with the same asset is going to be annihilated. Oh, goodness gracious. The only thing that is remarkably different this time is protocol synergy, interdependency, and strategy. Incentive systems that are strategic, where you're using another protocol's liquidity to incentivize your protocol. It's not being incentivized by itself. Anyone that goes it alone in this system has a significant disadvantage. The protocols that have synergy, partnerships, interdependency will hold up better than protocols that do not. Now, bear in mind, the vast majority of anything that I'll say bullish must be underscored with the fact that if macro conditions are right, everything is going to get completely hammered. Now, I speak with regard to bullish in the sense that if something depreciates less than everything else, it's outperforming relatively. And that's extremely meaningful. When the system implodes, you get the best perspective, the front row seat, baby, to see what is doing the best. The things that perform the best in deep disruption conditions highlight likely how meaningful the technology is. So I have 40% risk off, and it's stablecoins. I'm very comfortable with them. I technologically understand them for what they are. I understand how the pegs are maintained. I understand how pegs are rebalanced and the natural capacity for these systems to heal themselves. These are naturally repairing systems because it's profitable to rebalance pegs. It's profitable to repair a system that is temporarily disrupted, that doesn't have an invalidated narrative. Now, the beauty of CDPs is that they're comparable to historic financial structures. They are the iteration of a eurodollar, and that's everything. In many regards, that's the primary reserve currency of the planet. There's arguably more eurodollars in existence than there are actual dollars. So it's a dollar, a synthetic dollar collateralized by dollar denominated deposits. That's exactly what abracadabra is. That's what liquidity is. That's what DAI is. That's what MI is. And if thresholds are breached and dollar denominated price points are breached, you have a liquidation. If in legacy finance, you have a margin call, but here we have liquidation engines and automatic processes to ensure reasonable collateral management. So it's I don't want to dive too much into the stablecoin rabbit hole, but there's two separate components to stablecoins. You have the belief system. You have the lendiness and the stuff that drives the belief in the system, and you have the dollar peg. Peg is so overly thought about. Peg is a natural balance. It's an organic process. So as long as the belief system is not disrupted, pegs will naturally heal. And we saw this most recently with MIM, the functionality of the belief system and the collateralized debt positions. The technology works, so that's quite meaningful. I'm quite interested to see how Abracadabra shapes up in the coming years. Let me answer some questions. We got the chart up of the dollar. The whole system is primed. The whole system is primed to annihilate assets, whether it's crypto assets or equities. I mean, this has been forming obviously for the last couple of years, but it's just overwhelmingly indicative of an inverted head and shoulders pattern. And the left shoulder, right here, this thing is upward sloping. This has a bullish bias. When this thing rips to the upside, it's going to annihilate foreign currencies. It's going to annihilate equities and crypto markets, and it's going to annihilate the international supply chain, our export supply chain, and inflation is going to absolutely go through the roof at a consumer price level. This is what this chart says. And then the bond market says they have very little capacity to offload the balance sheet at all. If they All they literally talk about is slow. We're going to raise rates slow. We're going to really offload the balance sheet slow. If this thing rips above the 10 SMA in the yearly, there's only 3 times in history that you have a green bar through the 10 SMA in the yearly. And the last time you had it was 2018, and 2018 was one of the most ridiculously bearish markets for the entire crypto space. Does anyone remember 2018? Leading into almost all of 2019, folks were crying. And what is that? That's 94, 99. So there's the tech bubble. Look, you literally just had 10-year yields get to the 10 SMA, and then the tech bubble blew it through in January of 2000, and then risk off. This was the risk off for the tech bubble. This was the risk off for the pandemic in 2020. This was the risk off for 2018 and the taper tantrum. This is what happens when they try and unload the balance sheet. Look at the trend. Look at this experience up until 2018. Because 2018 is the first period in time they had a balance sheet that they were trying to offload. Look at the difference. 2018 blew through the 10 SMA to the point where the 10 SMA was vertically or sloping upward. Look at where the 10 SMA is now. This is in itself a regime change. This is different this time. Look at that 10 SMA sloping, and we're looking at 1, 2, 3, 4, 5, 6 years of data in the context of 40 years of data. This is not trivial, boys and girls. This is this is different. It is different this time, and I talk about that in the crypto space, which is what you guys want to talk about. So I'm going to get back on track. Let me hit some comments, and I'll talk about some assets, no doubt. Shisha, Crypto Profit, thank you, my friend. Patrick, hey, Rafael, aloha. Buenas tardes. Jay, good morning. I know MCRs. Adam, hey, no, I'm right in thinking you cut your multi position. I'm out of multi currently. It does not have a capacity to withstand a liquidity crisis at the macroeconomic level. I want it to. But it doesn't have the synergies with other protocols from a tokenomics perspective. I mean, multi isn't even launched yet, really. It's barely just a circulating token that doesn't emit the protocol's revenue yet. There's no VE multi yet, so it needs a lot of puzzle pieces to attempt to possess attributes that even have a remote capacity of withstanding a macro financial storm. Shisha, which is your most high conviction farm at the moment? Stable coins on Phantom in the curve pool, and I've opted for a my position on Chief Chi Dao. So this is what I opted for: 14.95% on Chi Dao. I own 10% of the pool. That's pretty cool. So it prints like $700, $800 a day. That's nice to see. So I'm sitting back and relaxing. I'm 40% risk off, and I'm not going to expose myself unnecessarily to the markets. And look, Annie's getting hammered. It's down to 17. I sold at about 20. I don't want exposure to this. I took fat and permanent slippage to exit the position. Must have been a $40,000 haircut just to exit the position, and that's okay. It's okay to lose capital to in order to restructure the portfolio when you see a significant narrative shift on the horizon. And for me, it's the macroeconomic factors, the bond market, the currency market, the dollar, as well as this complete tragedy. The equities market so far departed from reality. Whatever. The point is, I felt significant portfolio restructuring was warranted to the point where I got 40% risk off in stable land. Maybe that helps. What's my most high conviction? That's my most high conviction farm at the moment. What's my biggest revenue producer? CVX. Convex is my biggest revenue producer. It produces, and CVX is a third the size of my stablecoin position, and it produces twice the revenue. twice the revenue, give or take. So CVX is extremely productive, which means it's very efficient. It's 3 times, or give or take, more productive than my stable coins, albeit it's increasingly volatile, but the price point has done very well. If we take a look at its price point, nope, that's curve. Let's take a look at CVX. This band, this price action zone of congestion is quite interesting. Now, obviously, there's overtones of head and shoulders, but this this is an aberration. This is whatever that token was, Mosh, whatever it was. So this doesn't count. This is an aberration. So this has overtones of a head and shoulders, but I don't think it's the case. There's an interesting symmetry here. Look at the bottom bar of this fork. So there is particular lines from a geometric perspective that carry weight and meaning. It's not really a trend support or anything, but this price action zone of congestion is meaningful. Price action carries the strongest weight in potential support and resistance on a technical chart. And I'm very interested. It's above the 200 EMA and the 200 SMA on the daily. It never breached it this entire time. So it's a very meaningful moving average, especially considering the fact that it's upward sloping. So this is not my largest position. This is a locked position. I'm very comfortable with it. And most importantly, I tell you all you guys, you got to sleep well at night. That's if you're not sleeping well at night and you're worried, you got too much risk on, or your position sizes are too large. That's the deal. MCRs. Hey Noah, how do I invest in my pizza shop? I want to get started. Any suggestions? Don't. Not now. If you want to start a pizza shop, you go on Convex Finance and you look at stable coins, but you want to be cautious because of exposure to various risk profiles of stable coins. You know, like a three curve, three pull. But look at that, it's 1.77%. You're not getting a pizza shop out of that bad boy. There's nothing useful there. Well, Convex isn't loading here. I'd have to connect and stuff, but you know, if you get 5-10% of stables, but that's not a pizza shop. You know, a pizza shop. Even look at the curve returns. I've never seen the CVX CRV returns down to 38.44%, and you're telling me it's not different. You're telling me there's not a disruption going on in the market. There's a significant directionality shift, and that to me is the macro indicator that speaks everything. I don't need to be told that the market is heading in a particular direction. I see it written everywhere. This is the time to be protective. Now, I am exposed to the market as well. So I'm 40% stable, 60% exposed to very strategic, well thought out positions that I am prepared to see haircuts on. So, of the largest exposure of the portfolio, I'll give you percentages. You know, Frax and Convex carry another 40% of the portfolio. So look, I got assets depreciating. My dollar stablecoin position bumped to 41.33 in the last couple minutes. So over 80% of the portfolio is 3 positions, stablecoins, Frax, and Convex. And how do I come to that as being a rational allocation when I'm screaming that the market is extraordinarily bearish and I expect appreciation? So let's look at the chart for Convex, and we've seen, and I've been talking about this price action zone of congestion. That's extremely meaningful. If it hasn't punched through or hasn't depreciated more than this, because this depreciation right here, this is a full-on ABC correction. I mean, just look at that. It might as well be a measured move in many regards. And it fits within the fork, and we're traversing at the bottom of the ABC correction, this price action zone of congestion. This is an extraordinary chart from a technical perspective, especially being above the 200 EMA and the 200 SMA. So maybe we see a fat wick down and we see it go down to 16.15. It wicks up on a weekly candle. So I don't look at things on the daily basis. I look at it, but I appreciate them for what they are, and I'm more interested in the weekly time frame and the monthly time frame. So if I see a candle that drops below and it starts to wick up, great, groovy, grand. I expect the directionality of the asset over time to be appreciative. I'm comfortable with transitory depreciation. I'm comfortable with the yield on the asset. So I am comfortable with exposure to this asset in the position size that I have chosen. Let's take a look at Frax. I'm not going to get too much into the narrative, but you guys know the deal with Frax. Frax has FPI launching, and what it does is a stable coin, and who the developer is Sam and his brain and his mind and his ideas. You know, I talk about stablecoins being the biggest narrative in the entire crypto space. So I believe my sentiment is expressed that of how I feel regarding Frax and Sam and what he's building. And I have overtones of other protocols that I see in his work. There's a certain degree of reliability and prudence and patience expressed in how he releases products and software and features, so on and so forth. I mean, I just look at this price point. I mean, you got it, obviously the potential head and shoulders print, but you got a heck of a price action zone of congestion, and you have higher lows. You are above the guppies on the daily. Um, we are above this green line, which is quite interesting because that's a historic resistance. Clearly, not that I would love to get above this top green line. You break that top green line, and I'll be a little bit more content because that is a previous historic price action resistance. It's actually quite extraordinary how close these two candle, not closes, candle wicks line up. I mean, these just giant wicks to the upside. They were massive wicks to the upside. So there's some serious accumulation going on. That's my sentiment. I'm very comfortable with 20, 24% of the portfolio allocated there. Everything else is small positions. The largest position I have, aside from those two large positions, is 4%, which I expect to trim over the next 1 to 2 months, down to about 2.5%, maybe 3%. So everything else is small. Small allocations, turn 3% to 50%. It changes everything. You turn 1% to 10%, it changes everything. If you're going to do a large allocation, it has to be some shit you think is going to change your life. But it's not about hope. This isn't about dreams. This isn't about forcing making money. You can't force it. The second you try and force money, you're going to end up losing money. It's just that's the historic reality of all this stuff. So you want to place yourself in front of the train station before the train arrives. That's how you make money. So I hang my hat on my analysis of those two assets to such a degree that I remain exposed to it, considering macroeconomic conditions. Shisha, what is your most high conviction farm? I think I nailed that. Pizza shop. Good morning, Captain. Can you kind of give your opinion of beats and the bribes that are going on? So there's a lot of shit that's going on with regard to bribes, and Beethoven is quite interesting, and solidly is quite interesting. And I think there's going to be a huge amount of liquidity driven into the Phantom ecosystem. I think Beats has it right. I think solidly has it really right. Um, I think I think that's where the capital is going to go for a variety of reasons. I think solidly might be one of the biggest technological achievements in the last 2 years because it's an iteration, it's a manifestation of everything that has been done thus far. Iteration, meaning it's a result of looking over the best of what has been built to produce something novel and innovative. So it's big. That tokenomics is big. And the notion of bribes is big. It creates stickiness. I mean, we see what's going on with Convex, and who has the largest Dow position in Convex? Frax. So that's a good, big reason why that's my second. That is my largest volatile asset conviction play. Um, Bribes are a big deal. So if you have an increased risk profile, the beats might be an interesting thing. It could potentially turn into something like a curve where, well, maybe a convex or whatever the heck, something like a hybrid between the two. Um, but if DAOs start accumulating to control incentivized emissions, that's going to drive deflationary pressure. That's going to drive scarcity. And that'll ultimately drive appreciation over time, which is exactly the deal with Curve. You check back on Curve next year, it's going to be higher than where it is. It's the narrative is. That's the directionality. You could have a significant retrace. I mean, come on, you could get down to $1.30 from where we are, and you're still with a significantly appreciative directionality. as compared to where we were down at for the 34 cents. If you get down to here, you're directionally appreciative. And that's extraordinary considering the volatility, but it's also meaningful with regard to tokenomics and its resiliency that a hyperinflationary asset could be net deflationary. That's another level. So my opinion regarding convex has not changed whatsoever. I just don't think it's going to rip a 50x or a 100x. I think, you get to $20, $30 in 1, 2, 3 years. That's reasonable. And you get multiples. You get 3, 4, 500% on it. But that's generally my opinion. I obviously have spoken highly of Curve historically, an MMT money producer. Bing, bada, boom. All this stuff is still valid. The only reason for reallocation is opportunity cost, and that's okay. It's okay for your narratives to evolve. Hi, Noah. Thoughts on your Popsicle Finance narrative, and do you still have a position in it? I do not have a position. I have high hopes for it in Q3, Q4, and Q1 of 2023. It's not going to do anything in the short term and could likely get completely hammered if there's a macroeconomic event. Spirit had a boosted multi FTM pool on solidly, yes, or in Spirit. Okay. Yeah, that is a pool. Be careful with the double volatile pair assets. Could get hit hard. Captain, love your stream with Messi last night. That was pretty good. You talked about your change in multi. Are you still bullish on the synergy with Solidly? Yeah, that's a big deal. I don't have a multi position anymore. I said that earlier. I just don't want any positions in anything unless I have ultimate conviction in tokenomics that it's going to be less depreciative than else. Everything is going to get hit. The question is what's going to get hit less. Multi is a big deal, but there's a lot of multi-chain protocols that I didn't know about. Um, Meter, Rubik's, um, Synapse, and all the bridges that are, like Avalanche has its own bridge, and so on and so forth. So, it's a big deal. Multi is a big deal. I may have overthought how big a deal, but I think it's a big deal with potential integration solidly. But it's not in a state of tokenomics that I'm going to hang my hat on and put on excessive risk considering the macroeconomic conditions. Trim summer all of CVXCRV. I have no CVXCRV position. Look at FSS, so strong. Yes, indeed. What did you choose? Chief Farm instead of Convex Farm? Isn't the contract risk way higher on Chief? Well, no, it's Curve. So it's a Curve LP position, and that LP position is incentivized by Chi's website, which basically it's probably just a Master Chef contract, and Master Chef is a tried and tested contractual implementation at this point. It's just copy paste. The Master Chef contract, you paste it and you deploy it with your token modifications. So it's pretty straightforward. I'm not too worried about that in that regard. So then you got the whole complexity about the stablecoin peg. It's a CDP. It's a CDP, just like Spell and Abracadabra and Die. So it has the liquidation engine. And what catches my fancy about Chi is the Bashinsky connection, and they're very open about it. Celsius X, they're very open about the partnership, and literally, Chi now is like $50 million protocol. That's crazy. Soon. I got to wrap up the stream. Unfortunately, early. I do got a meeting. I apologize, guys, but let me see if I can get another question or two in. Good entry for convex. I would say a good entry to keep your eye on is if you see something in the low, like $12 range. If you see something around $10. You could probably get a little piece of like $15. But if you see a massive, massive wick down, these are the types of things that I'll be buying. I'll be adding it, 10. Oh my God, if you got the $10, that's such a buy. Um, and you don't buy everything. You don't bet farms on anything, but you take, another 2% position. 2% position. 2% of a portfolio. You got to lean into things. You don't buy everything. You buy on the way down just in case it keeps going lower. So you get positions. And you don't have to buy everything. If you want to take a 10% additional position in the asset, you buy two. If it goes up, maybe you don't buy and you're just stuck with a 2% position. You don't have to have the largest position size or a target position size. You don't want to get bitten in the ass. Um, Tyler, I'm pretty sure the convex APIC is a bug in the UI. It says 0. Yeah, I didn't have. I'm not connected to Ethereum right now. Vasco, hey sir, what do you think about Ring? Ring is cool. Check back Q3, Q4, Q1 2023. As soon can you see Spell getting everything's going to get hammered. Everything's going to get hammered at some point. The question isn't is it going to get hammered? It's the question is which is going to get hammered the least or more, depending on, glass half full, glass half empty kind of person. 60 watching, 20 likes. We can do better. What bags do you plan on filling near the bottom? I don't know. Like if there's a systemic contraction, 60, 70, 80% contraction on everything, I'd probably be interested. I'll be interested in a variety of things. That's an interesting stream. How would I handle a serious macroeconomic event? I'm going to circle back around on that. Let me get that. Let me get that out on Monday. Remind me to talk about that because there's a lot of things that I would buy when a discount emerges that I wouldn't buy at its current price point because I expect appreciation. But Buffett the market, boys and girls. That's what Warren Buffett does. He waits for blood to be in the streets, when people to be crying, they lost everything. I know that's horrible, and I have empathy for that situation. But they're crying, they lost everything. It's never going to stop going down. Fix the market, help the market, please, Fed. For my life is on the line. When that is the market condition, those are discounts, and that's why Warren Buffett is who he is. That's it. That's why he's achieved what he's achieved. Thank you, everyone, for joining. As always, Friday, February 18th, 12:02 p.m. Tell everyone to subscribe. I really thank you all. Be very careful. Watch the portfolio balance. Watch the position size. Watch the risk exposure, unless the macroeconomic conditions change. If you see bond yields start to come down and stabilize, if you see the dollar start to come down a little bit and stabilize, then you have a little bit of breathing room. But I don't like that breathing room. I want to feel comfortable in markets, not like we're on the edge and we step back from the edge just a little bit. We have breathing room. No, I want to feel like it's 2020 in June of 2020 when they just blasted $1 trillion into the market and this string is just up only. And that's buy the dip. Right now, this isn't buy the dip. This is buying hope. You don't buy hope. You buy dips when the market is ripping to the upside every single day of every week. Be careful, boys and girls. I'll catch you Monday. Ping on Twitter. After party on Discord if you have any questions, and I'll help out the best I can. That's the name of the game. Y'all have a good weekend now. I'll see you then. Peace.